Good morning, ladies and gentlemen. Thank you for joining this webinar on business analytics for strategic decisions. Whether you're a nimble startup, employed, or a seasoned business owner, you have to rely on data so that it can translate to your business success. Indeed, many successful brands use data to establish themselves as thought leaders in whatever field they operate in. Today, we have a rich panel of expert speakers who will be driving the conversation forward on today's topic. We have Frank Molla, who is the Managing Director and Head of Sub-Saharan Africa of BPC, David Taylor, who is the Lead Consultant of Usable Data, and our very own KBA Director of Research and Policy, Dr. Samuel Tiriongo. Before we kick off, I will request you to post your questions and comments on the chat box. Towards the end of the discussions, we'll have a Q&A session, so do feel free to put your questions there. We'll take them up. Over to you, Samuel.
Okay. Once again, a pleasure to speak to MSMEs and partners on matters to do with MSMEs. And as we get into this engagement, of course, we want to look at data through the lens of analytics. And most importantly, of course, shed some light on some of the findings that we actually came in contact with as we interacted in the MSME survey that we conducted in the month of May. So I'll take you through the highlights and, of course, spending very little time because I want to believe that we've all read the report that we published at the end of June. And therefore, these are just highlights and, of course, pointing areas of focus that we could possibly explore going forward. So yes, the theme for the webinar, definitely business analytics for strategic decision making. And of course, for us under this, within this space, we're looking at exploring the information content from the SME survey that we conducted in the month of May and published the report in June. I'll start off with a quote that by somebody called Alex Eniga, if I pronounced his name well, said that in the end, you should only measure and look at the numbers that drive action, meaning that definitely data tells us what we need to do next. And in this era of data-based decision-making, information-based decision-making, we couldn't overemphasize this component or piece of information that data is going to be key in terms of decisions that are going to be reached, and particularly for the banking sector, definitely. That is an important element, and that's why actually we had to do a survey in the month of May to get as much data as we could about the operations of the MSMEs. So the survey that we did, of course, we partnered with JICA in the survey, and the report is out there on our website. We looked at three areas. One is to really characterize the information that about the enterprises and the entrepreneurs that actually operate the MSMEs. And of course, looking at various aspects of this characterization, of course, starting from the ownership status all the way to access to finance, profitability, their perceptions about risk. Then we also moved on to look at MSMEs customer and supply engagement, just to look at the extent to which MSMEs are diversified in their engagements with customers as well as their suppliers. Then finally, of course, is to look at the extent to which they're actually utilizing the formal and the informal financial instruments, looking at perspectives of demand, perspectives of access to finance, the constraints to access to finance, are critical elements that we'll shed some light on as we go along. But of course, I'll encourage you to read the report, which is actually available on our website. So as a way of providing some highlights of the findings, and of course, as we look at the findings, of course, we draw some lessons, particularly from the data shared. As we appreciate the MSMEs that participated in the survey, we also want to highlight the fact that this information is actually going a long way in informing some of the strategies that are going to be employed by the banking sector, particularly to offer more services to the MSMEs, and where services are existing, of course, exploring opportunities for scaling up the operations. So we did find that most enterprises are actually micro in nature. And of course, the question that we ask ourselves is, are there opportunities for scaling up MSMEs? And of course, as we explore the opportunities for scaling up operations with MSMEs, we look at various aspects. And those aspects are the things that characterize the behavior of these MSMEs. And most importantly also is to draw your attention to the fact that close to 60% of these MSMEs are in the trade and ICT sector. So the question that we ask ourselves at this point then is, what is unique about these sectors? And if we relate this with the concept, with the finding that most of the MSMEs actually suffered reduced profits during the period of COVID, we see that there are some sectors that were actually resilient, like those in the manufacturing, ICT, and construction. They were actually resilient. So the positioning of MSMEs in particular sectors and those that continue to show resilience to the effects of the pandemic leads us to questions to ask ourselves about the drivers of resilience. And of course, as a bank, bank is in the business of mitigating risk. So MSMEs that stand out, especially during a pandemic situation like the one we are in, actually become more attractive. And the more you share that data about resilience story and your performance, even when there are unprecedented hardships that have actually been presented by the pandemic, it's an important element for bankers to look at. And the other finding that we also saw was that partnerships are relatively less risk takers. So this is with regard to highlighting the ownership structure of these MSMEs. And of course, we definitely would go into that space of asking ourselves, is there something about CHAMA or about group view of risk that makes the operations of enterprises under partnerships look like they are less risk takers compared to sole proprietorship and incorporated entities? So there are aspects about risk mitigation that have already been taken on board in the structure of the MSMEs as they were. Then the other finding was with regard to sector and age of enterprise matter for collateral requirement, because over time and in public domain, I think the issues about collateral have actually become quite important elements in the loan contracting. And of course, for us, since we are seeing that age of an enterprise matters a lot, the older the enterprise is, the less requirement for collateral. That, of course, points us to key facts that having a long-term view of business helps in reducing collateral requirements. So as you establish your businesses, of course, have a long-term view about the business, because at the end, it actually reduces or actually eases some of the bottlenecks that you would be facing with lenders, particularly if there is demonstrated evidence that you've been in existence through difficult situations, you've been in existence over time, and therefore you can weather the storm and your business is a going concern. So long-term borrower-lender relationship also matters to the extent that it actually reduces the collateral requirements that any enterprise would be needing for purposes of getting financing. Then of greater interest, and I would highlight this more, is the good record-keeping levels that we noted among the enterprises. And of greater importance is the fact that 70% of enterprises that we surveyed, of course, many of them under the Inuka program, actually keep financial records. And of greater importance also to this is the fact that many of them, over close to 2/3 of them, actually 60% thereabout, use computer-based softwares. So the question that we ask ourselves is there space and room for kind of interfacing records between the banking sector and the enterprises? Of course, at the moment, we would be exploring opportunities for getting partners who can possibly come in and provide softwares for record keeping that then can be interfaced to the banking sector for purposes of information and data sharing. And of course, this cannot be highlighted more than in a webinar like this, where when we are looking at data analytics. Then the other finding that is also of interest to us is the issue of MSMEs actually use less bank loans for startup, but they use more personal loans to support their businesses. And of greater importance to this is the fact that there must be some inherent bottlenecks that continue to affect the extent to which MSMEs actually can access bank loans. And of course, the question would be, what ails access to bank loan utilization? Now, we're following up on some of these things with research, and of course, we look up to our conference, KBA conference in September 2021, that is later this year, to actually shed some more light in terms of utilization of bank loan as well as utilization of personal loan for supporting businesses as one of the papers that is lined up for presentation. Then additional findings include the mode of payment that is actually adopted by MSMEs, and the driving factor is user-friendliness. So user-friendliness, meaning it's the opportunity for the users to actually have easy access in terms of utilization of these services. And of course, since it's driven by user-friendliness, we ask ourselves, are there opportunities to enhance the user-friendliness in most of the formal financial services? So for banks, how do we leapfrog from the current service provision to a more user-friendly space, particularly for the MSMEs? Then an additional finding that we also saw was that most enterprises have fairly good access to bank savings, but then their utilization remains low. So for us, we'll be looking at how do we possibly look at offering loans that are backed by savings account or that are actually interlinked with the savings account for purposes of ensuring that in as much as MSMEs are utilizing the savings services, they can also take advantage of the loan services offered by banks. Then we also went ahead to look at some of the demand characteristics for loans, particularly by MSMEs. And of course, in this demand characterization, we look at various factors that determine the demand for a loan. And one of the factors that featured strongly was suitability to the needs of MSMEs. So since this was highlighted by close to 9 in every 10 MSMEs that we surveyed, our interest then would be going forward. How do we recalibrate some of the loan products that are currently offered by the banking sector to meet the needs of MSMEs? So we are using this finding to push for easing of some of the things that continue to impede the extent to which MSMEs are actually getting services from the banking sector, so that they are as user-friendly as possible, easily accessible, and of course, meeting the needs of the MSMEs. But of greater importance also to highlight is the fact that 40% of MSMEs say that it takes less than a month. So again, allow me to just demonstrate this. 38%, actually less than 40%, say it takes less than a month for a loan to be processed. Of course, the question is, where is the other 60%? It's still a challenge, and of course, it's a pointer that there is need to, even as we improve the user friendliness of the products that are offered to the banking sector, it's also important to highlight the fact that the period for processing a loan matters a lot, particularly in terms of if you look at it through the lens of the resource requirements by MSMEs, quick turnaround would be an area that is going to be explored going forward. Then we also assess the extent to which the perceptions about interest rates that are charged for various loan products, and we can see that close to 87% of MSMEs say that interest rates charged by Shylocks, of course, definitely this is expected, are the most expensive, followed by non-bank digital credit providers. But you can see that with high utilization of this, as is known commonly, it's about accessibility and not much about the pricing component. Then bank facilities come in third. So you can see that there is an overriding need to look more at access more than the pricing component. And of course, we assessed the reasons that continue to constrain the MSMEs utilization of bank loans. And we did observe that the main reasons is actually in the documentation that is required by the banking sector for purposes of accessing loans. And the other important issue is about the financial situation. Then third is where now the lack of collateral comes in. So you can see the collateral is not being fronted as one of those important elements, but it's about the documentation, the formality in the services, in the contracting of the loans, becoming a critical element, particularly in the determination of access to finance. Then something wrong with my slides. Allow me to go back. Yes. Then, of course, the questions that we ask ourselves about perceptions on the interest rate charged, now that we know that it's really the banks come in third after the other digital lenders, of course, we ask ourselves loan requirements, issues about length of processing, issues about digital processing, the ease of processing, and how fast that loan can actually be made available become critical elements in determining the extent to which MSMEs can actually utilize bank loans. Then another finding of great importance is that as we assessed the demand for these loans, of course, our interest was to look at what is the preferred loan tenor. And we saw that most MSMEs actually are preferring 1 to 5 year type of loans. But of interest was the fact that having a long-term view, medium to long-term view of business is critical. One is to develop the relationship with the lender so that even as you develop relationship with the lender, the ease of accessing loans gets improved over time because of the relationship that you have established, just as we saw with the collateral requirements that improves with age of enterprise. Then there are growing opportunities in the mobile banking platforms. And of course, with this, we were looking at the utilization of the mobile payment services. We see that 66% actually use mobile technology every day. And as they use every day, of course, there's a potential for the banking sector to also lean in and look at what services can be offered leveraging on the mobile technology, particularly on the lending side, offering working capital support from time to time, leveraging on the mobile technology utilization. Then in terms of the other fintechs, of course, the utilization of mobile money is really for purposes of paying suppliers and also paying bills. So you can see that it is heavily entrenched in the businesses of enterprises, and of course, are leaning towards this in terms of leveraging on this platform for purposes of offering banking services continues to be an area that can still be explored the more. And of course, for us, we continue to ask ourselves, with the growing ecosystem of the banking sector, especially, and also the growing mobile money technology utilization, there would be opportunities for interfacing between banks and MSMEs, particularly leveraging on these platforms that are emerging. And of course, the evolution around it is something to watch going forward. Then, as I end, because of time constraints, we want to just reemphasize the fact that, yes, we obtained data from MSMEs, but a continued engagement with MSMEs is important because with data sharing, we can inform the decisions of the banking sector, particularly in shaping the evolution of the products that are coming up from time to time. And of course, now that we are looking at data-driven innovations going forward, particularly in the banking sector, we cannot overemphasize the need for us to continuously share data. And I would end with a quote by Daniel Daniel case that says you cannot have data with information. You can have data without information, but you cannot have information without data. So data is key in informing some of the pathways, some of the decisions, some of the credit profiling decisions that have actually to be made before a loan is extended to an MSME. Data is important, and I can encourage us over and over to continue sharing data. So thank you very much, and back to you, Roselyne.
Thank you so much, Dr. I can't agree with you even more in terms of just ensuring that to build a relationship with a bank will enable you to access bank finance easier. So allow me to invite Frank Molla to give his presentation now. Karibu, Frank. Can demystify data analytics for us. Over to you.
Thank you very much, Roselyne. Just want to check if you can hear me as I put my presentation up.
Yes, we can hear you clearly.
Okay, just give me a minute. All right, so as the presentation loads, I think you should be able to see it right in front of you. So firstly, thank you very much to Kenya Bankers Association for the opportunity to be part of this conversation on business analytics for strategic decisions. And also, just to acknowledge and appreciate that it's quite exciting. We live in a very, very exciting times and moments. By introductions, Frank Molla is my name, the Managing Director and Head of Sub-Saharan Africa of BPC, Banking Payment Context. So we're going to talk about data, and it's quite interesting when I was listening to Samuel speak, and what I could see is a lot of data. He was sharing a lot of data, thinking about application of a loan, what's the turnaround of that loan, and all the information I was seeing on screen that Samuel was presenting, pretty much was data driven. And how can this data be used to make certain decisions? If an MSME applies for a loan today and he applies for a loan tomorrow, it means whoever is processing that loan is already getting access to data. Does an MSME really need to keep on following through to it for maybe 4, 5, 6 days to get this loan? The person processing the loan has access to data to help them make decisions. So I really, really enjoyed that session because it's already touching on data. I'll briefly touch on demystifying data analytics because there's a lot of big names when it comes to data. But the one thing I will tell you is science fiction is slowly becoming science fact. And why do I say that? Disruption is the new normal. And you'll agree with me that we live in an area where self-driven cars are no longer fiction. It's happening. So you cannot really disrupt without data, right? So if I go to, to the analytics now on the agenda and discussion points for this morning, I'll be touching on some of the buzzwords that you hear around. A lot of people use a number of jargons when it comes to data. I'll be talking about how you can characterize data. There are people who have expansive of defining this. I'll talk about the common data challenges and mistakes, tips for getting value from data. And then, of course, the last one will be leveraging data. Again, this presentation will be passed on to relevant people on the call, on the webinar, so that you can, dig further into it. Now, let's go to the buzziest of the buzzwords. This is quite an interesting slide for me because when you think of data and you think of data analytics, you hear all sorts of names, big data, traceability, data lineage, artificial intelligence, machine learning, text analytics, and all these are buzzwords that we all hear every day. But the question here is, and if I take you back to this slide, we think big, yes, but are we acting small? So if you go back to this slide, a number of these buzzwords, they're very big names. We think big, but sometimes we also just want to behave like, you know, this knowledge, I know certain buzzwords. Does it really help us? So it is good to think big, yes, but let's see how we can act small, because data needs to be chewed in small parts so that you build. So I'm sure a number of you have come through all these buzzwords. The one thing I want to, you know, to share with you is, as we demystify our data analytics, is you really don't need to focus so much on the buzzwords. No, because data is all about information. Data is all about information that you're already receiving. So that's, you know, already you're doing some transactions, already you're attending to your customers, you're in your kiosk somewhere, there's some data you're collecting. Just make it simple. Don't make it complex. Data analytics is all about information. Now, if I take you to the next slide where we're talking about data characterized by 5 V's. Now, different people will argue that, you know, it's more than 5 V's. I mean, I'm here with David, and also David will be chiming in and contributing to some of these conversations. But the 5 critical V's when it comes to data, number one, if you look at, is volume. What do you mean by volume? So you as an MSME or SME, or you as a corporate person, you know, in the banking industry, or an entrepreneur, the question here is the 5 V's. When you think of data, there are specific characteristics of data, and number one is veracity, right? So no, sorry, it's volume. So volume purely refers to the level of data that you're receiving. Now, if you see on the left side, on the right side, from my side is on the right side, 294 billion emails are sent every day. 65 billion messages are sent on WhatsApp every day, all right? And think of it, 5 billion daily searches online. All this is data. Now you can imagine the volume. If you talk about 5 billion daily searches, that's
Hi, Frank. I think your screen is frozen again. Can you hear us?
No.
Give Frank 2 minutes. He sorts out his connectivity issue. Thank you for your patience.
Thanks.
Hi, everyone. Allow me to ask David Taylor to jump in. I think we're having some issues on Frank Molla's connectivity. Let me just share the screen for.
Oh,
David?
I've solved my sharing issue, so I
Oh,
can.
okay, perfect. Thank you for your patience.
Great, thanks everyone. Good morning, and sorry for the abrupt change in presenter. My name is David Taylor. I have a consultancy called Usable Data, and I've spent the last decade working mostly in East Africa, in Tanzania and Kenya, but across Africa and Asia more broadly, mostly with financial service providers and central banks, helping them drive better data-driven decisions. So today, I'm going to take our topic, the business analytics for strategic decisions. And before we get into the strategic decisions, I think it's often important. Sorry, there's an echo on my side. I'm not sure if somebody else has got the microphone on. Ah, perfect. Thank you. Before we get into the strategic decisions, starting their data journey, I think it's often super important to not start trying to run before we can walk. And the basis of any data-driven decisions is having better data. And this feeds us into our operational decisions. So what I'd like you to do is just take you through a couple of tools very, very quickly that if you're a small business and you're interested in starting collecting better data to drive insights, to drive better decisions, to give you some tools that you can do that and just to show you how easy it is to start this process. So from the first presentation, we saw that 60% of MSMEs MSEs are using some kind of computer software to keep their records, which is fantastic, and it's a great percentage, and it's a real triumph for Kenya that this is the case at the moment, especially in the face of COVID-19. So my guess is that the majority of businesses using some kind of computer software to do their record keeping are using Microsoft Excel. And there's a number of challenges. I mean, it's an amazing piece of software, and it's been a global standard for so long. It's incredible. I love it. I use it every day. But for record keeping and for analytics, there are several challenges, including one, it's a paid-for software. You have to pay for it now, or you get a cracked version, which I know is super common, and that comes with a whole bunch of other risks, including viruses and security, and the fact that the license runs out and you have to update your software and you can't update it. And it can be a really frustrating process going through all of that if you can't afford the pretty expensive licenses that they charge now. So there's a suite of software, and I'm sure a lot of you have Gmail accounts, and this is just a very easy way to start using some of those products. And I'm not an advocate for Google. There are other products available. I just wanted to give you a demonstration of how you can take some simple off-the-shelf products and start using them for your record keeping. So I particularly like Google working with small-scale businesses because it offers a complete range of products, and they're all free to use. So the first one is Google Forms. It offers an easy-to-use form builder, which allows data to be entered and validated on entry. So you can set rules, you can set drop-down lists. So it means that if you have one Duka and you're selling products every day, you can do your stock keeping on Google Forms. If you have access to a smartphone, you can set up a form, and it takes 2 minutes. If you can write a Word document, you can write a form. And what it allows you to do is dramatically improve the quality of your data and the structure of your data, which is as important as the quality. So you can see a couple of examples here of a simple form I set up. I'll put some links, and I'll put some some information together after the session that can be sent out. But what it allows you to do is structure questions like this, like classifying your products. So if you're a small business and you want to know what's making you the most money, if you want to track trends of sales of different products over different times of the year, how holidays affect the sale of rice versus ugali, what happens to your stock when schools start back, what starts selling more when schools start back, and what are you likely to sell out of, and how can you build that into your processes and your stock control and your purchasing routine to make sure that you always have the stock that you need, to make sure that you have the products that your customers want. So I'd encourage you to have a quick look. If you are capturing data on stock, on your financial record keeping, it gives you a lot more choice in how the data is entered, especially if you have other staff who are entering the data for you and you need some control over what they're entering and you have problems with data quality issues. It also goes straight you can set up these forms so they populate a Google Sheet, which is exactly the same as an Excel spreadsheet. So this is a great tool. Spreadsheets are amazing. I don't know how many of you use pivot tables. And if there's one piece of advice that I would give to any small business or people who are starting their journey from scratch, that they've never really explored data analysis, go on Microsoft Excel, go on Google Sheets, and just Google YouTube tutorials. I'll send some links out of some good ones about how to get started and how to use pivot tables. They're incredibly powerful, incredibly easy to use data analytics tools, which is where I would recommend everyone starts. And what it allows you to do is cut and summarize your data in different ways, to format it in different ways that can then start doing the pretty stuff. Then you can start driving charts and these trends, and that's where you get your insights. That's where you can start doing your analytics, and that's where you can start really implementing some of these things in your businesses. So for some of you, I know that there's a big ICT representation here, and these are some of my favorite, more advanced data analytics tools. With the time that we have, I'm afraid I don't have a huge amount of time to go into these in detail, but there's a group of free-to-use advanced data analysis tools, which you can use. Basically, all of these products, so apart from Google Studio, have a paid-for license, but they offer introductory products which in some way allow you to use the product for free. So one of my favorites is Tableau Public. It's free. It's incredible for creating public analysis and data sets and shareable reports. It's got a really, really strong user community online, which I think is something, especially when you're starting your journey and in these days of the pandemic, and if you don't have huge budgets for training, the availability to train yourself and to self-learn is really important, and Tableau has that in spades. It has a really strong community. If you ever have a problem, you can throw your work up online. Somebody will be back to you in an hour with a solution. I'll show you some examples of what Tableau can do in a minute. A very, very similar product brought out by Microsoft. If you're a larger company or you have a Microsoft Enterprise license, this often comes free included in your license. So it has some really nice graphics tools. They have a free desktop license for single use. So if you want to use it in an organization and share reports and share insights across larger organizations, then you have to pay for a license. But they will allow you to operate a single user desktop license. So if you're a small business and you want to do your analytics on your desktop and doesn't need to be shared within a wide group, Microsoft Power BI can be a good tool to explore because it allows you to all the power of their full suite of analytics products without having to pay for the expensive license, which allows you to use it on an enterprise basis through your organization. Google Data Studio is also a popular one. It allows you to keep your data private and it's free. This is probably my least favorite of the three, even though it's free, and I do think it's a good product for some people. It has a very steep learning curve, and you need to be quite dedicated to using this. Weirdly, for a Google product, the interface and the support, it doesn't have as big a user community. There is good support online, but I would say it's not quite as good as Tableau or Power BI. So that's some quick tools for your operational decision making, some data collection tools, some data analysis tools for you. So just as a very start for how you get started. So in terms of your strategic decision making for me is very much about taking the data that you have about your business and contextualizing it. And that's where you have strategic. That's, for me, one of the key differences between operational decision making and strategic decision making. Operational decision making is, what stock am I going to buy tomorrow? Where am I going to do my next construction project? Which supplier am I going to use next for these products? Your strategic decision making for me is very much focused on contextualization and what are my long-term trends? Where do I want to invest? What do I want to invest in? What business should I be doing and where should it be? And there's so much data out there, and I just wanted to show you some of the more novel, and these are on the extremer end of the use cases, but there's so much data out there which can be used. So if you're in housing, for example, housing and construction, which I know there's a good chunk of you, what was it, 15% of MSEs are in some way involved in construction. Kenya's really lucky at the moment because you have an incredibly recent census, and then the Kenya National Bureau of Statistics started releasing very detailed data. So this is a sub-county level map of housing tenure distribution. So you can see across the whole country the number of households which rent, who own, And you can group that, you can analyze that all the way down from national level to sub-county. So you can see here a cluster of green, which is where you have very high levels of rented or provided households. You can look at that as owned household ownership. So it gives you some real market insight. If you want to do investment and you're looking at rental properties versus ownership and what kind of properties you want to be building where in the country, this is a really nice data set to be able to have in your fingertips. For any business, understanding your customers and understanding their economic situation, the profile of the area that you want to be built, that you're operating in, where you would like to invest next. The distribution of these customers is going to be really important for you. And again, the census offers some amazing data on this. We've got the household assets distribution index from the census, and you can see here the level of ownership of bicycles, cars, computers, televisions, internet, motorcycles. And not only do these things give you a sense of the market if you are directly selling these things, if you're a computer supplier, an IT supplier, and you want to be selling laptops and computers, looking at areas which have low penetration, reasonable economic profiles, and possibly high demand or increased demand from things like teleworking, where you're likely to have businesses where people are going to be working at home, or higher demand through education because schools haven't been able to operate in the same way during COVID. There's so much you can do with this data and so many insights. The website's up here. I'll put a link in the chat. COVID-19 Econ Data Kenya. Another one of my favorite data sets that we've been exploring, which is one of the most buried data sets I've ever come across, is the Kenya National Bureau of Statistics actually released the income commodity purchases. And I apologize, this is a bit jargony. They basically did a survey in 2016 of the amount of money that every household spends, broken down by these areas. So it's urban Kenya, Nairobi, upper, middle, and lower income, and then the coast, central, eastern, northeastern, Nyanza, Rift Valley, and western. And they surveyed households for the percentage of their income that they spend on certain goods. And that's everything from rent to bananas to clothes to fruit and nuts. So this for me is one of the most incredible data sets I've come across, and I've not seen it released publicly in many countries. But you can actually tell, not county by county, but at these grouped areas, where people are spending their money and where people's priorities lie. For example, I was just having a quick look through it, and you might expect, and I'm not from the travel industry, but from an outsider's perspective, and I have a reasonable economic overview of Kenya, I might expect higher income Nairobians to be the highest spenders on air travel. And as a percentage of their income, that's actually not true at all. It's the middle income Nairobi bunch who are spending all their money on plane tickets. And that shows you the level of investment and commitment that they're making, because a lot of this travel, some of it may be for leisure, but I would imagine a lot of it is people moving around for business. Which is interesting, because a lot of the marketing that I see in Kenya for air travel in particular is very much dedicated. It's aspirational, so you would expect this, but it's pitched very much at the high end. And I think understanding this market on a small scale, whether you're Inuka selling soap or whether you're Kenya Airways, is super important, and it helps you target everything from advertising to your product messaging to the products that you offer and who you're offering the products to. I'm going to stop there very quickly before we go into the use cases. I've got a couple of use cases that I wanted to take you to talk you through quickly. I'm going to stop there for any questions or for Frank to jump in just before I continue. So I've either been cut off, or I'm going to assume everyone is happy. I'm going to take silence for compliance. Roselyne, can you just confirm that you can hear me?
I can hear you.
Okay. Perfect. Okay. Then I'll jump back in. Do you know if we have Frank back?
Yes, we have Frank. Frank, do you want to jump in, or do you want to do the case studies now, David?
Okay, I'll jump in and do the case studies.
Okay.
So my first case study, it just shows that however big a business you are, there's always something for you to learn. I'm going to go through this one quite quickly. This was back from the very early days of mobile money in Tanzania. And I was working a lot with the Financial Sector Deepening Trust in Tanzania and some of the central bank there and some of the telcos. And there was this, can you see my my cursor if I move this on the screen? Or hang on, there's a pointer. Okay, can you see? Yes, there's a red dot. Great. So this was what was happening with the explosion of mobile money agents in the very early days of mobile money. And what happened was that this is a very, very low income area. And there were these narratives going around in the market, especially in the financial inclusion community, that mobile money had solved this problem of the unbanked and that people, low income households now had access to financial services through mobile money, and that this was a great thing. And it was the same coming out of the telecoms. Interestingly, what we saw, we got a data set with the number of transactions that these agents were doing every day. So this was all of the agents. This was the agents doing over 25 deposits a day, which is roughly where you would be breaking even. It's kind of worth keeping your phone charged and keeping e-wallet on your float, especially for small businesses where opportunity costs are high, where if you've got money in your phone as e-float, then you don't have it for trading. And these were the ones, the agents doing over 50 deposits a day. And you can see what happens to this low income area as we scroll through these. That's all the agents, that's the ones who are breaking even, those are the ones who are actually making money. And there's none in this area. None of these agents were making money, they're not contributing, mobile money isn't contributing economically to this area. They were also, interestingly, what we found when people went to talk to them was that they had accounts, but the opportunity costs were too high because they had to pay. There's no fixed electricity here, so people were using solar chargers and people were having to pay to charge their phones, so they weren't charging their phones, and the opportunity costs to keep money on their phones were high because they couldn't trade with that money, they couldn't buy and sell stock with the money that they were having to keep as e-flow. So this narrative that was going around about mobile money being driven by P2P transfers and these and low income usage was completely false. On the flip side, Vodacom at the time had spent over $500,000, $750,000 developing a system dedicated exclusively to businesses. It was online, it allowed you to make bot payments, had some nice features. Completely failed, and their conclusion was that that businesses weren't interested. The interesting thing that we can see here, all these really highly successful agents, all of this is the area between the port and the airport. And all of these are go-downs, they're all distribution-based businesses. And what was happening was these businesses were being run almost exclusively by older men in their 60s. A lot of them are family-run. These aren't men who had, at the time, 10 years ago, laptops on their desks. They weren't computer literate, they weren't comfortable sending money through the internet, but they would go down to an agent and hand cash over and handle their cash distribution through that. This had been completely missed by Vodacom. And you think of the people who are going to spend the most in a market. I mean, Vodacom easily in Kenya and Tanzania, Safaricom in Kenya, are spending huge amounts on data analytics, and they still missed it. So there's always things you can be learning. There's always novel ways to look at your data. Another use case, which I'm afraid I can't show you because the data was actually under an NDA, but I did some work with breweries, and this, I think, for Kenya at the moment is so important. The opportunity for insights through data sharing is incredible. I did some work with a brewery, and we basically plotted the volume of sales and the brands being sold across the city in Dar es Salaam, and this again was about 10 years ago. And what we found was that successful bars had a few key characteristics, which wouldn't be a surprise to any small business owner. They were on main roads. They were on the 4 arterial roads leading out of Dar es Salaam. They were more successful if they were closer to bus stops. And those are the key indicators. Apart from, if anyone's familiar with Dar es Salaam, this part here, around here, is Sinza. And this is an arterial road, this is an arterial road leading out of the city, and you have a road here called Shekilango Road, which links these 2 arterial roads. It's very near the university, which is the campus here. And all of this is the lowest quality, good quality housing you can get. By that I mean it has a demarcated plot. They have walls around them, but they're still, the build quality is low. So they're kind of starter houses for people who are who are making a regular income. It also is a real mix of light industrial area with so high waged income coming through, regular work mixed up with these reasonable quality housing, and it has an incredible footfall on this particular road. And what we found was that from the socioeconomic characteristics of the area, because the income was still relatively low, you would expect a reasonable quality of beer to be being sold and the brands to be kind of mid-level beer. What we found was that it was all premium, and the profits and the volumes being sold were just through the roof. And what it is that it's a single road where everyone is walking up and down to work and back every day with cash in their pockets because they work and live close to the business. So they're either walking or catching the bus a couple of stops to work. Everyone can see you in the bar. They're all roadside bars. So that everyone will see you, all of your friends would see what you're drinking and judge you by it. And so the sales of premium beer in this area were absolutely through the roof. And what happened was we did this analysis for the brewery. And for me, I went mad. I was like, I'm going to invest in a bar in this area. But the opportunity here would have been for the brewery to turn around and say, okay, bar owners, anyone interested in opening a bar, these are the insights that we found. We found this particular set of characteristics in this one area, which if you can find bars with these areas with these characteristics and put bars there, you will do really, really well. And this is this, I think Kenya is the prime market for this, with distributors like Coke and Unilever to come together and do the data analytics to support small businesses, because you buy from them, especially as a pandemic recovery plan. They have so much data that they're sitting on and could be using to generate insights for small businesses. And I think this is being hugely underutilized in the market, and it's in their interest, because they want to sell more product, and the only way they're going to sell more product for small scale to small scale retail is if they support business owners, small business owners, with better data. And this goes for every sector and industry. Small scale trade is definitely the easiest to make a case for. But I think the opportunity, and for Kenya Bankers Association and things like this program aiming to support small businesses, this is one of the biggest data analytics opportunities I can see in the market. They have greater capacity. You're not doing duplication, so no small business has the money or time or capacity to invest in this kind of analysis, but the suppliers do. And coming together and lobbying them to add value to your business, I think, is a huge opportunity. Thank you very much for listening.
Thank you so much, David. That was a very interesting case study that you've shared. Indeed, where people are spending their money and where they have their priorities are do inform how we should make decisions. So allow me to ask Frank Molla to unmute.
Thanks,
Frank,
Roselyne. Can you hear me?
Yes, we can hear you.
Okay, so maybe you just help me put my presentation up.
No problem. Let me do that shortly.
I mean, David, really interesting. I mean, what I was speaking when you're speaking basically is, not using data to make decision. It's not a data problem. It's a people's problem, right? I mean, data is there, and there's a lot of data like what you're saying. So, pretty much it is there, but it's just how do people come and embrace this? So really, insightful. Roselyne, let's go to the fourth slide. Yeah, so here we were talking about the characteristics of data. And I mean, I like what David had talked about, because David has demystified almost and talked about the models, the tools that we can use for data. He's given the real examples of, specific areas of how data is being used. He's talked about how we have so much of data out there and where we have different supply chains happening and how we can access that. So that has taken us to an area just to see the potential. You could see the volume of data in that as you look at data characteristics. The other thing I was going to talk about was variety. Data comes in different forms. So basically, it's up to you to know how do you want to structure your data. The other one is more around velocity. Velocity really is the speed of how much of that data is coming. And that's what I was talking about on the right side. Can you imagine 4.5 million YouTube videos are being viewed every single minute, right? That tells you the speed by which this data is really coming. And then of course, 5, you know, it's very, very important for us to know it's one thing to generate all this big data, but until we can turn it into value, it's pretty not, we're not gonna use much. And if I borrow from David's presentations again, is think of all those over 60-year-old people by the roadside. Think of how much of information these people have and the value. But if they're not being given that information, then it just becomes dead. There's no value whatsoever. So these are some of the characteristics when you think of data, is just making it easier to demystify for you that it's not that complex. But when you have these 5 and you're trying to do data analytics, it also makes it simple for you to be able to continue to understand data. Let's move to the next slide, please, Roselyne. Now, what are some of the common data analytics mistakes and challenges? And this one, you're going to get them. You need to think outside the box. Let me start with the corporate space, and that is on the bottom line. When you talk about competing priorities, what you have now is in any organization, there's a lot of competing priorities, and data is not looked at as if it's anything that is important, not realizing that that priority that you're putting ahead might really need some data to back it up. So a lot of competing priorities create a challenge for us to be able to use data. Think of yourself as an SME. You might be focusing so much on receiving this cash, focusing on your customer and how much am I making at the end of the day, but you're forgetting you've gotten enough data from this, from your consumers that you can still use to get back to them. Think about data being used in silos. Today in different organizations, what you're going to see is marketing team has gotten data, but they're not sharing this data with the other team members. IT team has data, but they're not sharing this team with the sales team member, right? So what does that do? Currently, we have data being consumed in silos. Now, when you have a structure of this data being spread all across the organization, it becomes easier for you as an SME as well. When you get this data, be it a partnership agreement or you're 2 or 3 or more people, how can you get this data and share it across amongst yourself? Lack of skill is one of the things we also realize, as well as lack of understanding. But like I'm presenting is, it is not that complex. You just need to start simple. And to David's point, there are very basic, simple tools you can start using, which are on Google, which are even for free. And slowly you start building your understanding and skill. And lastly, on the competing side, which in the organization, on the corporate space, we tend to see a gap between the C-suite and the analytics team, whereby analytics team will come with data and say, this is what we are seeing. But sometimes the top level will come and say, wait a minute, we do have priorities and competing priorities. So what happens? The analytics team tends to suppress and they really don't share this information. Again, as an SME, you might be sitting there as the owner of your company and you're analyzing your data yourself and you can see this. But sometimes what you do is you ignore this data from your M-Pesa database. You know, you're saying, no, I don't need to use this. Let me focus on the cash that is coming. So these are some of the also challenges that we see. Of course, the other areas of being careful, I'll let you to read through the presentation, which is going to be sent. Things like sampling bias, and I've tried to really break it down and make the definitions as well. Roselyne, let's move to the next slide, please. Now, tips for getting value from your data. I just thought of having 4 tips, and this one I picked from a Harvard Business Review. Number 1, stick with simple models. As an SME, it's not complex. It's not supposed to be complex. You don't need to focus on the buzzwords. It's as simple as it gets. Make it simple. Focus on reducing the time between the data acquisition and the development. You know, start small and build on it slowly. Go to your Google website, download that model. It's free of charge. Keep on playing around with it. A number of us are using Excel now, but we have a lot that you can now get online, and it's going to really make it easy for you. Number 2, explore more problems. So when you have access to data, you need to keep on, playing with different models. Today you're saying, okay, how many people came to my shop today? Is this number of people?
How many people bought this product? Is this number of people? How many people came? And you have to explore a number of things and varieties as that retailer, as that organization, or as that entrepreneur. So you keep on playing with all these models, and slowly what happens is you'll start getting yourself building some small predictive models. You'll start seeing like, oh wow, my data is making sense, because it can even take you to who are buying your goods more. Are they male or female? What age bracket? Where do they? I mean, it's a whole lot of information you can get. Number 3, again, learning from a sample of data. Instead of taking so much of data and trying to struggle with a lot of it, just do sampling. Take a few and then decide, let me see the behavior of these 10 people. How are they behaving? What time do they buy? How do they buy? How frequent do they pass by my shop? If somebody comes to your shop, let's say you're a MSME, like a kiosk, this person comes to your shop to buy a packet of milk. But you need to ask yourself, wait a minute, but where does Frank buy his bread? Because it's a complementing product. And where does he buy his sugar? So you start asking yourself by using some very simple and sampling the data that you have. The next time Frank comes to your shop, you need to ask yourself, but Frank, you buy milk from me. Where do you buy your bread from? You start collecting information to help you. You're in a banking setup. You have a customer whose turnover is quite high, but you're wondering, this is a business person. Where do they take their loan facilities? Where do they invest? Now take that small data. When you meet your customer, start asking these questions, but don't just take all of it. And then lastly, all this needs to be automated. It's very important for you to be able to automate your data for point of reference and to just make it easy for you. Almost the last slides now, Roselyne. Now, this one is, how can you leverage data? It's one thing to generate all this big data, but until we can turn into value, it will not help us. Until all these consumers, until all your customers, until all your, the people who come, who've opened bank accounts with yourself, if you're, working in a financial institution, if you're in the government, if you're in the tax place, if you're a real estate person and people are trying to check your website, until you start using this data, it's not really going to make any help. You'll sit back and say, I have all this data, but that's it. You can have data without information, like initially it was said, but cannot have information without data. And this I just, picked from what was said initially when the presentation was happening. So on this slide, which Roselyne will also share with all of you, it will show you how can you leverage data. You'll gain deeper insight into your audience. It cuts on a lot of costs, refining your marketing strategy, because there's reactive data, there's proactive data, right? Reactive data is where you already have this information. You can do something with this information. Proactive data now is where you sit back and start doing some analytics and say, if this happens, what is the outcome? And it really helps you. So you have to keep on analyzing your data. It's also going to help you with competition at the same time. And I think for me, the last one on the last slide, Roselyne, which as I conclude, I always say that technology is the how and the human is the why. As we embrace technology, it is important, but don't become that technology. And the last example I want to give you is, if all of you, if you know there's this program, I think it was on Netflix, called A House of Cards. What Netflix did was very simple. Netflix went ahead and bought the series season 2 and I think season 3 of House of Cards before it was out. People ask themselves, how did they do that? It's very simple. It's all about data. Look at yourself today when you access Netflix. What happens? When you finish watching one episode, when you finish watching something, it automatically gives you suggestions of what else are you likely to watch. Why? Because they've picked the pattern of what you're watching, and now they're suggesting to you, hey, Frank, this is something else you can watch. And you find yourself clicking and going like, oh, wow, this is also cool. So House of Cards, what they simply did was they went back and analyzed the director. They went back and looked at the previous seasons. They went back and looked at the main actor, and they looked at, there's almost over 4 million people separately following these people online. So what did they do? They said it's a no-brainer. We are willing to put $100 million to buy this even before it comes out. And it was a success because they ended up making billions from that. They did not have to wait. And this is the value of data. So as I conclude, like I said, technology is the how and the human is the why. As we go to talk more and learn more about data analytics for making strategic decisions, just remember that as you do and work on data, it will never not make yourself be in a position where data technology is going to replace you as a human. It will never do that. Thank you very much, Roselyne, and I really appreciate for having the time and the session as well.
Thank you so much, Frank, for that insightful presentation. Indeed, I think data does inform quite a bit in terms of just the value that you put into your business. So allow me to check the chat box to see if there are any questions. Thank you, David, for sharing all the different links. Lots of positive comments from the participants from today saying that the presentation was quite insightful. I can see a question from Thomas, actually from Kendrick, asking how do we approach data-driven decisions on making in banking where most of banks' processes are still manual and data is not centralized. Most data sits in legacy systems and with users. Maybe Dr. Samuel Tiriongo, you can take up that question. Maybe the rest of you can chime in if you have anything to add.
Well, thank you. And of course, to laud Frank and David for highlighting the frontiers in data analytics and how best we can tap into this. And of course, throwing caution on even as we embrace technology, we should be very careful not to become it. So there's a conscious move towards adoption of technology. And this is best displayed in the banking sector because whenever there are innovations in the banking sector, it actually goes through several channels of screening just to identify areas that could possibly be explored. And of course, watching that even in the adoption of these technologies, we do not introduce risks at the same time. And that's why even during the era of COVID, as the banking sector actually went digital in most of its service provision, of course, there was consciousness in terms of we need to remain alert. You saw our Kachonjo alert messages going out to the public. So one is there is technology, and two, there is risks associated with technology. And in many occasions, of course, a shift from one way of doing business to another way of doing business, and also another way of doing decision making that is informed by data. One, of course, would require that there is integration of data from different segments. And of course, as it sits in different segments, of course, there is a reason why it sits in different locations, different segments. Of course, in a bid to kind of limit and mitigate risks that can be that can emerge as a result of integrating the data, the leapfrogging towards integration of data to inform all decision making, of course, needs to be a careful process, moving from one level of data spheres and data environment to a new level where you can get it to one computer and get all the information that you need. Of course, it comes with its own risks. And of course, that's why the movement and transitioning to undertaking or using data for decision making, of course, should be done bearing in mind the risks that can actually emerge. And even as we talk about the data-driven decision making, we also talk about data-driven, the innovations that are emerging that are actually leveraging on technology, the digital space. And we saw in 2020, actually, the central bank publishing the digital services regulation. And of course, the debates around should the market move ahead of the regulations, or should we have e-regulations, for instance, to look into some of these innovations that are leveraging on data. And of course, because of this, there are the services offered by the banking sector are under the purview of a regulatory framework that is actually offered by the central bank. And of course, the movements from one framework of offering services to another would require concerted effort and consultations between market players and the regulator. And of course, that in itself ensures that all the mitigations of risk have actually been taken on board. And I must laud also the innovations that are coming up, and of course, driving the thought processes towards adoption of more data in the decision processes. Even in the current manual processes that you quote, we're talking about how can we improve the manual processes? How can we have data actually improve even the existing manual processes? Because in one way, we can have centralized data of information that is not necessarily posing a risk to the operations of the banking sector, so that even the loan processing that is actually done can also be improved, even when it is still in that space of being manually provided. So definitely it's a journey, and that journey we start off by talking about it like we're talking about it now, and looking ahead, looking at the opportunities that are availed going forward, especially in the efficiency gains that data analytics would actually bring to banking business. So of course, let's continue this journey in discussing the opportunities going forward. So, and of course, with that, I must thank Frank and David for continuing to partner with us, especially in providing the frontiers to knowledge about data analytics. And let's continue engaging. Thank you.
Thank you, Dr. David, Frank, do you have anything to add on to that question?
Very quickly, just I think it was Thomas's question. In terms of how do you solve the problem of data siloing and getting particularly a bank which has a very heavy load of institutional inertia that they're driven by their processes, by history. Investment. It's a very simple answer. The answer is very simple. You have to invest in better systems. The question is, how do you get a bank to invest in better systems? And from my experience working with central banks and regulators and with commercial banks, is that it's very, very difficult to sell a proposition theoretically. So I always like to start with the insights. So gather together, get your business intelligence tools. Get a license for Tableau, BI, teach some tricks and build narratives out of the data that you have available. And it will be difficult and it will be time consuming because these data are in silos and it will require a lot of legwork to do that. But it's worth putting the effort in, build an analytic product, and then take that up the ladder to your C-suite, to whoever's going to be making the investment decisions and say, this is what our data could look like. These are the insights it could generate. This is what it could do for our business. Now help me streamline the process because it's taken me 3 months of legwork just to put the data set together behind this, and I can't do this every month for you. To me, that is the strongest way to sell and to break institutions, particularly banks, which are so difficult to move ahead technologically, and everyone is invested in their own systems. There's so many different political and technical barriers to it. Unless you have a product to sell, you're going to be banging your head against a brick wall. So develop a product first. On your own, it'll be hard work, but you can do it. There's some great tools out there. And if you need support, people like FSD, who I'm here on behalf of, and KBA, there's some things we can do to support that. So yeah, build a product, then sell that. You can't sell an idea.
Thank you, David.
Yeah, Roselyne, I mean, for me, I'll just summarize what David and Samuel have said because they've touched on all this. And this is, we just need to know that to succeed in life, we must stay within our strength zone, but move out of our comfort zone when we're thinking about data, right? And lastly is the one thing that I always also agree with is technology has advanced greatly, but human psychology is still the same. And this is why we're still struggling with some of these things when it comes to data. But now, if the human psychology also around data just keeps on growing, and to David's point and what Samuel has said, then we'll slowly demystify this narrative. And it should be easy for us to really get into that space where we're getting a lot of buy-in as much as data analytics is concerned. Thank you.
Thank you. This question is to Samuel. It's from Collins Ogutu from Metropole. is asking, business and simple strategic decision going to counter, is it going to counter non-performing loans, referring to CBK report? I think he's trying to establish whether business analytics actually counters non-performing loans based on a report that CBK has tabled.
Yeah, of course, the comments coming out of the CBK report was the fact that with the innovations that came through, there were concerns about the emergence of growth of non-performing loans, especially on the products that are emerging, especially leveraging on the technological innovations. And definitely, and that's why I did mention about the issue of, even as we adopt technology-enabled product offerings that actually are coming out, they still need to monitor the credit risk, particularly in these new frameworks of offering banking services. And therefore, in as much as it's encouraged, and of course the benefits have been outlined today, the cognizance of a bank is really to monitor the evolution of credit risk. And now that we are doing profiling, e-profiling of customers in this space, of course, it becomes a real challenge, and that's why perhaps you see the slow and sure adoption of technology in the offering of banking services because of the risk of non-performing loans in the event that these customers are not adequately providing information that can then e-profile them to a level where a bank would be comfortable to extend loans. And that's why you see many of the mobile-based loans are actually micro in nature. It's really because of the attempts by lenders to continue minimizing the exposures on that front because of the risks that are inherent.
Thank you so much, Samuel, for that very comprehensive answer. Allow me to just thank everyone for joining and to close the session. We've gone over time by at least 19 minutes. I want to thank David, Samuel, and Frank for their time, giving very insightful presentations. Of course, we'll share the slides after this session. And I see another question that has come in, but allow me to take it offline. With that, ladies and gentlemen, allow me to close this session. Have a good day and have a wonderful weekend. Good day. Bye.